Good. How are you, Mark?
Good. How you doing?
I'm doing okay. You're going to share a screen and talk, or you just want me to move around to different markets that we cover? Up to you.
Why don't you lead, since I am just tech challenged?
Okay, I can relate to that. People, yes.
Coach, since I have to go, can I ask a question? To Mark.
Absolutely.
Before I go. Okay, perfect.
Go.
Mark.
Okay.
Mark, although I'm following you on Twitter, we've spoken again here on the webinar. We share 95% of our views about the global economy are the same. I mean, we from what I've seen, we have the same idea about the situation in which the U.S. and the global economy in general are. Yeah. The only thing that we seem to have a big divergence is that I see that you are a very big believer of cryptocurrencies, while personally I'm totally unconvinced, because I don't really see why cryptos can offer superior value to the traditional fiat currencies, which at least have some, whatever that's worth, of course, government guarantee and their legal tender, or to metals, which we all know that for example, especially gold and silver have been accepted as money for 5,000-6,000 years, and I don't think that's about to change anytime soon. So I would really want to hear your viewpoint about that.
Yeah, so we do have a lot of similar views, and I don't want to. This is not a criticism of you, but I want to challenge the one point you made, that fiat currencies have value. Fiat currencies have no value. They have zero value. A green piece of paper with a 20 written on it has no more value than one with a 50 written on it, or one that has 100 written on it. You can't turn it into the government for anything. And no, it's not even a promise. There's no promise. You can't turn your green money in to the government and get anything. It used
after
to be.
1970 and after 1971, you are absolutely right. But the question is the following: both of them, I mean, cryptocurrencies and fiat currencies, are based in essence on faith, because that's what you implied. That the only
trust.
thing that, exactly, trust and faith, exactly, faith in a system, trust in a government, etc. So why would it faith in a government or trust in a system, and that comes from a person that really believes that the governments have abused in the absolute extreme, the way that the economies work. I mean,
so let me ask you this: do you know anybody from Zimbabwe?
I know what happened to the Zimbabwe currency.
Okay, do you know anybody in Venezuela?
Yeah, good one, Mark.
I know absolutely.
No. But I'm asking, right. I'm asking, do you know anyone from Zimbabwe or Venezuela?
Yeah, I do, from Venezuela.
Okay, so I know people from both countries. I have in my office that this friend gave me a 100 trillion Zimbabwe dollar bill that would not buy a loaf of bread. Okay, 100 trillion Zimbabwe dollars wouldn't buy a loaf of bread. So what's happening all around the world is the dictator playbook. And the way it works is a dictator comes in and takes control of the assets, and then you devalue the currency and inflate the price of the asset. What people don't realize is the Venezuelan stock market last year was the best performing stock market in the world.
In nominal terms. In nominal terms.
That's my whole point. It was the number one. And if you owned Venezuelan stocks, or you owned Venezuelan property, if you were part of the dictator's cabal, you got very, very rich, and the people got very, very poor. So what are the people doing in Venezuela? It went from $2,000 a month of Bitcoin exchange in Venezuela a year ago to over $3 million a month. And they are, if you look around the world at the countries where Bitcoin is being used most heavily, it's in countries where there are dictators who are stealing the wealth. So it's Turkey, it's Venezuela, Argentina. I won't call him a dictator because I actually like mockery. But if you look around what's happening in terms of currency, the reason that Bitcoin will be a superior currency over the long term is it's sound money. It can't be inflated away by a central government. And it's early days, right? You talk about 5,000 years for gold. Absolutely, 5,000 years. But gold was very, 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 very volatile in many periods in that 5,000 years. And there were times, I mean, imagine being the first guy who someone came up to you and said, hey, I'll give you this shiny yellow rock and you give me some of your food. The guy's like, get out of here. I don't want a shiny yellow rock. But
then you hit the guy over the head with the shiny rock and take the food.
And take the food. That's exactly right. So here's the thing. 5 years ago, I stumbled across blockchain technology and Bitcoin, which is the first application of blockchain technology. And I was skeptical. And the more work I did, the more people I talked to, the more I looked into it, the more excited I became. And there's no question in my mind that over a period of time, and I'm talking decades, not days, there will be a significant shift away, not completely away. So I'm not saying that Bitcoin is going to be the only global reserve currency, but I'm going to say that it's going to become popular enough that it does the two things that currencies do. It acts as a store of value and as a medium of exchange. And everyone says, oh, but in the last 12 months, it's down 80%. Right. But in the last 10 years, it's up many, many thousands of percent. And if you held any other currency in the world over the last 10 years, you have less value than if you held Bitcoin. Now, I'm not saying everybody should rush out and sell all their other currencies and buy Bitcoin, but I'm saying as a portion of your portfolio, and I think a growing portion over time, I think it's got a place. So it's a long, long, long story, and we don't have time to do it this morning, but we could talk about this, once a month for the next 10 years.
We will.
We get the whole story.
Thank you, Mark. Steve,
Can I ask you something, Mark, out of curiosity? Because you're right, it's a big conversation, and we'd gladly actually have even a webinar exchanging views or having a debate about cryptocurrencies, why they can or why they can't potentially end up replacing. And wait, let me be specific about that. I do believe that blockchain technology has a lot of value. So I do believe that the future might actually be currencies based on the blockchain technology. I'm extremely skeptical if those currencies are going to be the ones we currently know, like if they're going to be Bitcoin, if they're going to be Ethereum, because you know how governments are, right? If they see that this thing actually becomes popular, they're going to make what they can to put their own.
Have their own because they're.
Okay. This is really important.
Okay.
A government cannot have a cryptocurrency. Government cannot have a cryptocurrency. A government can have a digital currency. In fact, the U.S. dollar is effectively digital today. 92% of U.S. dollars are electronic. Only 8%
Why can't
are
they,
notes.
Mark?
They can't because a cryptocurrency must be decentralized. There cannot be one owner. It must be ownerless. No one owns the Bitcoin network. There are thousands and thousands of nodes around the world that operate. There are miners that secure the network. It's the most secure network in the history of networks. It's the most powerful computing platform in the history of computing platforms. And it's all because it's decentralized. The reason centralized systems fail, the reason the first 3 attempts at digital currencies back in the late 80s and early 90s failed.
Because all governments are corrupt.
Well, it's not even that. That's true, but it's not even that. A digital currency has a problem, 2 problems actually. One is it has a single point of failure. So any centralized system, think about a centralized company. How do you stop a centralized company, right? One CEO, one home office. Well, you kidnap the CEO or blow up the home office. And I'm not encouraging terrorist activity. I'm just saying, if you wanted to shut down, think about Napster. Napster came out and said, all right, we're going to allow people to share files of songs. The music industry didn't like it. They went to the government. The government said, all right, Sean Parker, you're arrested and we're going to break your server. game over, centralized system. The second problem that digital currencies have is they don't solve the double spend problem. So if we decide we have a new digital currency, and I have digital currency in my account, and I want to send you one, Dale, okay? I make a copy of mine, I send it to you. Then I make another copy and I send it to Steve. I've just committed fraud. Now, no one can stop that in a digital system. But in Bitcoin, okay, using blockchain technology, which has a third layer to the ledger, it's not just debits and credits, but a third layer. It's a public. So if I say I'm going to transfer 1 Bitcoin to Dale, everyone on this call has to give thumbs up. They have to see that Bitcoin transfer from my ledger to your ledger on the chain, and then it becomes an immutable transaction, and we solve the double spend problem. So every government in the world, India's already done it, is going to try to move away from cash. Japan's going to do it. Russia's going to do it. China's going to do it. They're all going to have digital currencies, but they will not be cryptocurrencies because they are centralized, they are fiat, and they're still subject to devaluation at the hands of corrupt governments.
But,
wow,
but I don't feel strongly about that.
Isn't it a form of, I mean, theoretically speaking, like you can't have infinite amount of Bitcoins, but as the recent past has proved, nobody can stop infinite number of companies or people creating infinite number of cryptocurrencies, right?
No. Okay, this is really important.
We currently have
conflate. No, don't conflate the term cryptocurrency. Don't conflate the term cryptocurrency. There are only 12 cryptocurrencies.
With tokens.
All the other coins or tokens are utility tokens.
I used the token mark in Chicago to get on the bus. Yeah.
Very important point. A utility token is it gives you access to a network or allows you to have a use case. It's like a Chuck E. Cheese arcade token. A cryptocurrency is functioning as an exchange of value, a medium of exchange, or as a store of value. And there are only a dozen of those. It's Bitcoin, Monero, Dash, etc. The others are basically pre-seed and seed stage venture capital projects. 90% of them will fail. They have nothing to do with the supply of quote unquote cryptocurrency. Cryptocurrency, as you said at the very first point, right? The only reason a currency functions is because of trust. And they all go along this thing called the law of increasing returns. Paul Romer just won the Nobel Prize for this. And he basically wrote 30 years ago that when you have something, it doesn't have to be the best technology. It just has to gather the most network effect. Betamax versus VHS. There are myriad examples of this throughout history. Once you get to a critical mass of acceptance, then you can become widely used. So Bitcoin is a sound currency. It is a cryptocurrency. It's decentralized. There's 21 million. That's all there will ever be. And that single currency can never be deflated by other people creating utility tokens. Not related at all.
Question. Last question, because I really have to go. I have an appointment with the orthopedist.
Yeah.
What is the price under which you?
Oh, you took every question away from me today.
Yeah. What is the price under which you would lose faith? Because theory says that anything that loses more than 80% from its peak is likely a bubble that has burst, and it has a very high likelihood, it's not impossible, but a very high likelihood that it's never going to recover again.
Simply not true at all. Again, that's just simply not true at all. There have been 5 quote unquote bubbles in Bitcoin, all down 80%, and it's recovered here's the thing. This is not a bubble.
I think it would be unfair. It would be unfair to count the ones that happened when very few people were actually into that market, because we have to agree on that. This is the first bubble we had in Bitcoin, with cryptocurrencies having become popular and people participating, globally, right? I mean, initially,
every measure of fundamental value of the Bitcoin network is better today than it was 4 years ago when we had the exact same situation. We went from $10 to $1,000, from $1,000 down to $166. Everybody said it was dead. Everybody said it was over. Today we're at $3,400, which is materially higher than $166 and materially higher than $1,000, the previous peak. So
under which
people
price
are
would you
focused on the wrong number. You can't focus on what the price was on one day last year. That's not the value of the network. The value of the network goes according to Metcalfe's law, which has to do with the number of participants. The number of participants in the network is higher today than it was last year and the year before and the year before. The number of daily transactions, higher this year than it was last year and the year before and the year before. The number of global nodes, higher today. The number of global users, the number of global wallets. Every single fundamental factor of Bitcoin is better today than it was last month, the month before, the year before. Now, you can say, oh, but there's this big pop in transactions last December. Yes, there was, because the price deviated from value. It's like saying that NVIDIA is going to go away because it went down 49% in the last 30 days. It's just not going to happen.
Which, by the way, was a factor of what happened to cryptocurrencies.
Debate.
No, it's an interesting debate. Anyhow, I have to go. Thank you very much. I'm going to listen.
All right, good to see you. Take care.
All right, Mark. I'd like to follow up on some of the things that you really are a great ambassador for this new asset class. I want to say that because Steve's very good, and he hit you with a lot of stuff that you actually made him quiet after some of your answers.
No. That's not the point, Dale. Here's the thing.
I know.
I've never met any smart person, right, who didn't start skeptical, including myself. I started out very skeptical 5 years ago. And here's the thing. If you spend time truly learning about the technology, about blockchain technology, and the applications of blockchain technology, of which cryptocurrency is only one application, and Bitcoin is only one application of cryptocurrency. Once you spend the time and you meet some of the people that are involved, and you realize that the flood of talent into this space is like nothing I've ever seen except one other time in my life during the early 90s and the internet.
Okay, .coms, yeah.
And what people forget is, Amazon, great example. Amazon is a network. It's not really a hierarchical company the way most of us think about it. There is a company that owns the network, but the reason Amazon works is it's a network of users that facilitate everyone else's use by creating
the acceptance. Like you said, it's going to happen. Right. Okay. So, Mark, I know you're a pretty good technician too. And I also know that you probably talk to a lot of other very good strategists and technicians. And, actually, because my background is looking at formations and so forth, that I actually am becoming interested. I have a 3 drive formation that may be setting up under 3,000. They maybe take out the big round number, one more flush, but as you can see, a lot of the RSIs are not confirming. We've been diverging for quite some time on the 4 hour, and for the first time in a while, the RSI on the daily these were all confirmed lows. So you can't count on when momentum is confirming price that's a low. But now, even if we broke under to 3,000, we will have a divergence on multiple time frames. Are you hearing any numbers that people like that are considering entries? Any levels that may make you interested to add on to your holdings?
Yep. So let's talk about this, because look, I was wrong, flat out wrong. I thought the lows were in February at 5,900. We touched that level 4 more times, and then we had this giant drop here in the middle of November from around 5,900 down to where we are today at 3,400. And so, Aaron, so what did I miss? Well, what I believe I missed in doing a lot of work on this is this problem of of the futures markets, and very similar to what happens in the gold markets if you're, believe in that, which I do. That
hypothecation of people.
Rehypothecation, exactly. And so I think the problem is I believed that cash settled futures wouldn't allow the rehypothecation problem to be as acute. And it turns out I think I was wrong when you look at the data. And I think what's happening, honestly, is that there's some very large and important institutions that really don't love the idea of Bitcoin being successful, and they can buy physical Bitcoin and then they can short with a vengeance multiple times that holding in the futures market and essentially rehypothecate on the way down. So I think that's creating a lot of downward pressure. And the problem you have with this asset is it moves along this parabolic growth curve following Metcalfe's law. But the way it does that is it moves in these parabolic advances and then crashes. So, and that's because what happens is the early adopters or the innovators or the believers, whatever label you want to use, the 2.5% that kind of got this market going, they're not going anywhere, right? There's thousands and thousands of wallets that have never done a transaction in last 5 years. So those people aren't going anywhere. Then you have the converts, people like myself who came a little bit later to the party. That's another 10, 12% of the general population. And those people have pretty high conviction, and they're not going anywhere either. The problem is then you get this group of speculators, and speculators always are drawn to rapid price movements. So when this thing was running from 10 to 100, you had speculation, and then it crashed. And then it was going from 100 to 1,000, and there was speculation, and it crashed.
And not only speculation, a lot of people using it as a trading vehicle, owning it on margin, leverage.
Yeah, and that's what I mean by speculation. I don't use the term speculation with a negative connotation.
Yeah.
Right. You have a different time horizon. There are a lot of speculators in history that are really, really talented, and they're just traders. But an investor has a different time horizon. They want to buy something, hold it for a long time, make a big return. A trader or a speculator, and the difference here is an investor buys or sells based on their perception of the price relative to value. A speculator is really only buying because the price is moving, or selling, right? They could be shorting on the way down, they could be buying on the way up. And again, that's not inherently evil, but what it does, it exacerbates moves. So the move last year from 10,000 to 20,000 that happened in basically 35 days, I tweeted about it, I wrote about it, saying, guys, this is crazy. There's going to be a correction, and you should kind of step to the sidelines, wait till it bottoms somewhere under 10,000, kind of first, second quarter next year. And then I kind of revised saying, well, I really do think 6,000 is kind of where that flush happens, where all the people that bought in late got kicked out. And it seemed to be that, right? We were stuck at 6,500 for a very long time.
Yeah.
And then we had
many retests. What I've learned is the more retests the market has of a support or resistance level, become more skeptical and jaded, because the markets usually don't accommodate people and say, well, you missed buying it at support in March. Here, it's May. I'll give you another chance because I'm a nice guy. So when they accommodate, normally if a level's important, you get the move off of it, maybe one retest, but it was like months of giving people, hey, come on in, the water's fine, this is going to hold. So I'd like to ask you something for old timers that really don't even know how to purchase Bitcoin. What do you think of GBTC as the Bitcoin trust? Is it viable? Do you think it is a viable way to, speculate on the price of Bitcoin?
Absolutely viable. Here's the thing. What GBTC is it's the only listed way that you can hold in a regular brokerage account of getting access to Bitcoin. There's no ETF, and you don't have to own it in your wallet because they do the custody for you. And what Barry Silbert and Digital Capital Group in creating this entity that created these trusts. And they've got one for Bitcoin, they got one for Ethereum. I think they've got 9 of them in total.
Oh, and okay.
What
is GBTC the most liquid? Because
yes, by far.
Okay.
Yeah.
Because I look at the 1 hour chart, and sometimes you just get dots. That tells me there's not a lot of volume.
This has got $800 million of investment, and Grayscale is a really good organization, and so this is absolutely a viable alternative for trading. The problem you have is historically this traded at a huge premium, like a closed-end fund, because it's essentially like a closed-end fund. Okay. And it traded it at 180%. So basically, if Bitcoin was 10,000, you were paying 18,000 for $10,000 worth of Bitcoin. That was a bad idea. And so when it started going down, that premium unwound. And I think today, I don't think it trades at a premium.
Okay, that'd be good to know.
So I think at this level, what you need to decide to buy it here is all the things you were talking about from a technical perspective. I believe the fundamental story is intact, but I think right now there's more speculative activity than fundamental investors, because all the fundamental guys, they're in at much lower prices. They're not doing anything. And what we have now is the final washout of the speculators that came in at 6,000 or 5,000 or 4,000 last year. Mm-hmm. And they went up to 20 and at 6 they were still a little bit in the money. Well, now at 4 or 3.4, they're not in the money. So they're actually still selling. So what I would look for is what you said, is when you get a divergence on that relative strength, when it looks like people are starting to accumulate again, maybe you could buy. And I wouldn't call this a double bottom yet, because you just made a new bottom, a new low.
Right. New lows,
so I'd want to see one more kind of retest of that bottom on lower volume. And you could almost make the case, right? It's a stretch, but you could almost make the case that low that we had on third or fourth and on high volume, and the low we're having today on lower volume, you could kind of call that double bottom. It's a stretch. It's a very big stretch.
Okay. All right. So we spent the majority of our time here on the interview talking about crypto, and your recent appearance on CNBC, a lot of conviction about 40-50% decline in the market over a longer period, about 3 years. So you described, the first year it's going to be choppy down. And I know you also have a bias towards liking what's happening in Asia, that this is going to end up being their century. So is there anything that you would also do? I assume you're a dollar bear to, with your own money. Would you go ahead?
I am a dollar bear. And I've been wrong this year, in the sense that, it's not a big move, but I would have thought, at the beginning of the year, I think we were in the low 90s, and then we fell down to like 87, 88, and I was feeling pretty good. And now we zoomed back up to 97, and everybody's saying, "Oh, see, I told you so. I told you so." Well, we're still below. I
wasn't doing that.
I know. We're still below 103, where I think we peaked 2 years ago when the Fed started raising rates, because historically when the Fed raises, the dollar falls. So I'm compelled by the dollar shortage story, and I'm compelled by the challenges of foreign markets suffering when the Fed raises rates. But I still think the dollar's in a secular decline. That's a great chart right there. It's a great chart. So I think the dollar's in a secular decline. I think that, we're going to see, much lower lows, and I think it is the Asian century. So I'm pretty bullish on, and I was early, that's the euphemism for wrong, on A shares. So ASHR is something that I find really interesting today.
What is that? What is that? A WAN exposure?
That's an ETF. That's not renminbi. That's actually A shares. So the local shares in China. And I think what that's going to benefit from is two things. One, from what we understand, there's going to be a pretty significant stimulus package in terms of taxes in China starting on January 1st. And they're basically going to double the exemption for households, give people 5,000 renminbi to go out and spend on stuff. They're also going to let people write off mortgage interest and rent, which I think would be kind of interesting since they have a lot of renters.
Yeah.
But I think that's going to be a very interesting dynamic. I also think that, when people look at this trade war, they think, the U.S. is winning. The U.S. is not winning. It's not even playing the same game. China has been 2 steps ahead of us in everything they do. You look at, we increased tariffs on Chinese goods. So what did they do? They weakened their currency exactly the same amount and totally offset. So their exports actually grew in the last 3 months, not fell. So they're playing a different game.
Anytime someone says they're not going to weaponize their currency, I look for them to weaponize it.
Exactly. So I do think, the challenge for currency traders here is the dollar. If you look at its primary trading partners, the euro and the yen, all 3 of those currencies, I believe, are in a race to the bottom. And it's just going to be a rotation between who has to take the pain. So right now, the euro's taking the pain because a year ago, the euro got way too strong. And it probably has plunged Europe into recession, right? They had negative GDP last quarter. They'll probably have negative GDP this quarter. And so, that'll be a recession. Japan's already in a recession. Technically, they've had 2 negative quarters. So I think next comes our recession next year. And I think that's when the dollar will take its turn, having to devalue to try to stimulate growth. But
how about to save the market, just like you were talking about, Venezuela's stock market exploded on the collapse of their currency. I believe, Mark, that the Fed will sacrifice the dollar to generate a recovery in the stock market, even if it is in nominal terms, because that's their tax receipt machine.
100%. And look, it's the dictator playbook, and that's actually not a comment on our current administration. It's just we've never had higher wealth inequality and income inequality in the history of the United States, and that's just a fact. And why does that happen? It happens when the government, the elite, passes laws and rules that allow a minority of people to gather all the assets, and then they systematically devalue the currency for 2 reasons. One, because the only way out of massive debt, right? We're never going to pay back our debt. We're going to inflate it away. That's what governments do, and they've been doing it for millennia, not centuries or decades, but millennia.
Like the Romans took out more. First it was gold, silver, and then kept taking out the content of silver.
Exactly, and that's why we have ridges on our quarters, so you can't do that.
That point you made about the elites and the income disparity is all you have to do is go down any street in America and find someone who's renting a home, who owned a home, that's now renting a home from the people who bought it out of foreclosure from them.
Exactly.
What do you think?
I think that's a perfect example. I think there are so many examples. I mean, I was in the car on the way to do a CNBC hit last Friday. I was only in the car for 30 minutes. I heard 6 ads on the radio for debt relief, tax relief. I mean, every 5 minutes there was another ad for, if you owe the IRS $20,000, we can get it. There's a myth that you have to pay the credit card companies back. You don't. We'll help you. Like, holy crud. That means we are right back to the depths of crisis. Everybody says this is the world's greatest economy. Are you kidding me? It's not even close.
Hey, I interviewed a guy from Greenwich who's a trader and hedge fund guy, and he said he's seen hedge fund guys at food banks. Even though we had a great bull run from 2008, these hedge fund guys are hurting too, and most of them have moved to Florida.
It's because, look, there's a difference between somebody who really starts with nothing. They don't have that much to lose. When you have a lot, and in particular when you lever, which was very easy to do. Everybody could buy a bigger house because they could get a no interest mortgage, or you could get a bigger car because you have to make payments for the first 6 months, or zero interest. And everybody levered up. And leverage is a great tool when things are going up, but boy, it can bite really hard on the way down. And I think that's happening. And I don't think we're going to have the 2008 kind of calamity, because that was leverage in the financial system. I think where the leverage is today is in the consumer. And so the reason I think
how about corporate debt?
I think corporate debt is really, really ugly, but so much of it doesn't have covenants that the banks aren't going to be able to actually do anything about it. If you loan somebody money and you don't have any rules
collateral
for that collateral, then you're kind of screwed. So I think what's going to happen is a whole bunch of zombie companies, the ones that are really, really over levered, they're going to go bust next year and the year after. And the reason I think it's going to play out over this 2000, 2001, 2002 cycle. So I think this year was 2000, right? We had the tech bubble, we had the correction. I think we're going to finish the year down single digit, losses. 2000 wasn't a big down year. It was only down 9%. 2001 recession hits. First quarter, they don't call it till September. I think same thing will happen next year. And that year wasn't even that bad, down 14%. The really bad year was 2002 when the debt bubble blew up. Enron, WorldCom, all the telecom companies. And I think that's going to happen. I think the shale companies are going to blow up. They're way over levered, and oil prices are going to be, I think, stubbornly low for a while because supply. Think about this number. In the last 12 months, U.S. domestic oil production is up 2 million barrels a day. 2 million on a base of 9. That is a monster growth. And people think, oh, Saudi Arabia caused oil prices to crash. No, they didn't. Texas caused oil prices to crash. Very simple.
Okay. And I think one other negative, Mark, I want to get your view on it. The tax cut by Trump, all the corporate debt being taken on by high flyers, and with that money, instead of investing in the future, they used it for buybacks. So aren't they actually leveraging their own stock with buybacks, and as rates increase to roll over their debt that they use to do these financial engineering things, that could only exacerbate a decline?
No, look, this is the most heinous form of corporate kleptocracy I think we may have ever seen. Now, I wasn't around in the 1920s, and there might have been something worse back then, but this is so bad, and I believe it was completely orchestrated. And basically, here's the deal: the U.S. central bank is not allowed to buy equities by law, right? Japanese central bank can buy equities, Swiss national bank can buy equities, but the U.S. central bank was not allowed to. So what they said is, all right, fine. Here's what we'll do. All right, companies, we'll give you a tax cut, but here's the deal. You can't actually use that money for anything except stock buybacks, basically stealth QE. And that way you'll keep the market up.
Okay.
And you can pay yourself in options, and you can steal a lot of money from the shareholders.
Right.
And it is the biggest transfer of wealth by basically manipulating interest rates to low levels, allowing them to borrow money to buy back stock. I believe it's the biggest corporate theft in the history of the United States.
Mark, you're a watchman for the industry of people that are interested in the markets and trading. I want to continue to encourage you to do that, to go out and speak the truth as you see it, because I learned a lot from you today, and I want to say thank you for being here in our community. And people, you could follow Mark at Mark Yusko on Twitter, and his company is Morgan Creek Capital, and you could go to his website. And good luck with your bet on
thank you.
Bitcoin outperforming the S&P. I'd like to throw silver in there. Anyway, Mark.
I like the silver choice too. That's a good one.
All right, buddy. So really, thank you so much,
Thanks,
Mark.
Dale.
You and your family have a Merry Christmas and Happy New Year.
You too. We'll talk soon.
All right, buddy. All right, everyone. That's Mark Yusko Hope you were edified by his appearance today. I know I was, and that's a wrap for F.A.C.E. See everyone tomorrow. Remember, don't just count your pips, count your blessings. Oh, you're very welcome, Stephen. And we'll see everyone for our webinar tomorrow. So good hunting the rest of the day. Adios.